Greetings again. My name is Sanford Khan. I'm a business author and speaker. The latest book I wrote is entitled The 13 Great Economic / Business Myths That Dominate Our Lives. The title of this presentation is How to Make Money by Selling Call Options. Actually, it'll increase your cash flow and reduce your risk and volatility a little. Let's go through a real-life example. By definition, one call option is equal to 100 shares. When you sell a call option, you're giving somebody the right to buy your stock from you. This is a stock option, stock call option, at a certain price within a certain time limit. They're not obligated, but they have that right. For that right, they will pay you money, cash, it's called premium, right into your account. That's yours to keep no matter what. Let's go through a real-life example that I took from Yahoo Finance. Verizon, symbol VZ. You buy 100 shares of Verizon, $37 a share. 100 shares is $3,700. I am neglecting commissions to make it easier. You give somebody the right to buy one July 38 call, and for that right to buy your 100 shares of Verizon between now and the third Friday in July, it's always the third Friday in July when it expires, for that right to buy 100 shares of Verizon from you at $38, they will pay you immediately $67 into your account. That's yours to keep. And you bought the 100 shares at $37 a share. So what's your total rate of return? Well, it's 67. The denominator would be what you paid for it, and you got $67 for it, and this is for 3 months. You're doing it today, and that's for 3 months out. That's a 3-month option. To annualize it, which all rate of returns are annualized, so 3 months into 12 months is 4 times, multiply this times 4, that is 7.2%. In addition, Verizon pays you a dividend of 5.2% at the closing price when I came up with these numbers. You add these two together, it's 12.4%. Now, this is what you have to be aware of. Nothing stays the same. There's always movement going on in the markets. There's always volatility. Stocks, just like the market, could go 3 ways. They could go up, they could go sideways. Sideways mean within a narrow channel, or they could go down. If Verizon goes up or goes sideways, you will achieve your 12.4% return. Actually, if it goes up and gets called away at 38, you'll make a little bit more because you have a $100 appreciation there on your 100 shares. If it goes down, and it could go down, if the market goes down, Verizon will probably go down, you'll get less than your 12.4%. And if it goes down far enough, you'll probably have a negative return. Selling call options helps to mitigate risk and volatility, but it cannot eliminate it. Nothing could eliminate it. Now, I guess the only way you can eliminate it is don't buy any stock. Just put it into treasury bills, but if you're satisfied with 1/4 of 1%, that's fine. But here you have the opportunity of making more. There's always risk. You should only do this if you feel it's suitable for you. But I can tell you this, from my own experience, what may not be suitable for you today, maybe and probably will be suitable for you tomorrow. In my book, The 13 Great Economic Business Myths That Dominate Our Lives, I have a real-life example on Chapter 11. Chapter 11 is entitled, Personal Investing is a Tricky and Complicated Affair. That's the myth. No, it isn't. I go through a real-life example. I suggest you get the book and read it. It's available on Amazon.com for $9.95 plus shipping. There's 3 ways you could get it. Go to Amazon, search for books, put my name in the box. You could put the title of the book in the box, which is The 13 Great Economic Business Myths That Dominate Our Lives. Better yet, why not go to my webpage, which is www.businesstrendspeaker.biz, B-I-Z, and on the right-hand side, you'll see a cover of the book. This is what it looks like. Click on the cover and that'll link you automatically into Amazon.com and you could order the book. Get the book, read the chapter 11. The first chapter you should read is 11. Go through that real life example. And then you'll know, well, if it's not suitable for you now, at least you know that this thing is there. It's a great hedge. Selling covered call options is a great hedge and it's conservative, but you got to learn how to do it. I wish you well, and may you be solvent. Thank you very much.